But One Gold's a platform that allows customers to buy, sell, and trade vaulted positions of gold, silver, and platinum stored in the US, Canada, Switzerland, or the UK. And how we do it is first we have agreements with various vaulting companies in the world. So it could be the Royal Canadian Mint, it could be Brinks Vaults, it could be Loomis Vaults. We then source the 1,000-ounce silver bars and the 400-ounce gold bars. So these are the bars you see in like big movie scenes where someone breaks into a vault and you see all these gold bars. So we buy a lot of these.
So today we're going to get a little macroeconomic. We're going to talk about gold. I like gold, and why. And the title of the show is "Why Should Investors Consider Owning Precious Metals?" And in terms of building a portfolio. One of the things that we talk about, there's 4 asset classes: business, real estate, paper, and commodities. Real things, right? And so your diversification is not getting 50 stocks on the stock exchange. To me, you're just shuffling the deck chairs on the Titanic. And so what you want to do is you want to be diversified and own some real stuff. So let me tell you about our guest today, Patrick Yip. So Patrick serves as the director of business development for APMX and One Gold. All right. And if y'all put in the show notes, I interviewed the president of One Gold probably about 3 years ago. So, and so that was a good conversation. Apex is one of the largest retailers of physical gold, silver, platinum, and palladium. Has sold over $15 million in product over its 20-year history. One Gold is a fast-growing online precious metals platform. So we want to break that down a little bit. That's processed over $750 million in transactions during its first 3 years in business. And Patrick is the director of business development, so he's overseeing that growth. Okay, and then I'm not going to give him the whole thing, because I want you to tell him, Patrick. So, Patrick, tell him what I didn't tell him. Welcome to the Practical Wealth Show. First of all, thanks for being here, and
Hey.
let's teach these people a little about real money.
Great. Well, thanks for having me on, Curtis. So as you mentioned, I'm the director of business development at APMEX and One Gold. APMEX is the largest online precious metals retailer in the U.S. We've actually done over 15 billion in lifetime sales to retail customers. Been in business for about 20 years. I've personally been with the company for about 12 years right now. I've held various roles in merchandising, sales, project management, marketplaces, and now business development. Most recently, I've begun running One Gold, which is that online investment platform that allows users to own vaulted positions of gold, silver, and platinum. And as a data point, One Gold's done about 900 million in transactions in its first 4 years of business, so keeps on growing. I was also involved in launching the first ever precious metals rewards credit card, and it's called the Bullion Card.
We definitely get into that. Okay, so let's go. I want to drill down into the company, because I'm really fascinated about how that works and how people can do that. But I want to start big picture, and why. So I'm going to go with the title of the show. Why should people be adding precious metals to their portfolio? Why should that, in your opinion, should it be part of their portfolio?
Yeah, so I think every asset class has a different tool in a portfolio. I think it's wise to be diversified, but I think given this time right now, I think precious metals are going to perform extremely well. And the reason I say that too is you look at the news, you're hearing inflation's at a 40+ year high, 7.1% is the latest number. Basically, the last time we've had inflation at these levels was the 1960s, 1970s, and basically just getting into 1980. If you look at past cycles too, we had an inflationary cycle in the 1960s. It took the Fed 9 years to resolve that cycle. We had another inflationary cycle in the 1970s. It took the Fed 5 years to resolve that cycle. So where are we right now? We're about 2 years in. Inflation just last year in 2021 in January was 1.4%. We're at the end of 2022, approaching 2023. It's debatable if the Fed could tackle this inflation in 9 years, 5 years, 2 years, whatever it is. I personally don't think the Fed has inflation under control. I think it's going to get sticky at some point. Maybe it's not 7%. Maybe it stays at 5% for several months, or maybe it's 4%. But and keep in mind, the Fed's target is to have inflation at 2%. So they're still well away from that, even if they're at 4%.
Mm-hmm.
So I like to look at it too. So that's the current picture. So what do different asset classes do? If you held cash, which I recommend holding some cash for liquidity, but obviously
Yeah.
don't go heavy in cash because inflation's eroding away this purchasing power. If you had 7% inflation compounded at 5 years, assuming inflation is going to last that 5 years, it's going to erode about a third of your wealth. And then let's say inflation lasts 9 years, like it did in the 1960s, it's going to erode north of 55% of your wealth just by holding cash. So you don't want to be heavy in cash. If you look at stocks, I know you mentioned paper earlier. Basically, the S&P 500. If you look at the 1960s and 1970s, the stocks were flat to down during those inflationary cycles. So,
Mm-hmm.
you know, keep in mind, inflation was approaching 50%, 15%. Sorry, not 50%. That would be a
Mm-hmm.
whole another
Yeah.
15% in the 1980s. So
Mm-hmm.
even if your value of your stocks remained flat, you lost purchasing power. And then lastly, let's look at gold too. So gold in the 1960s was actually pegged until 1971, went from $35 to $200 during that first inflationary cycle, and then had a little correction in the mid 1970s. But in that second inflationary cycle in the 1970s, it went from 100 to 850. So if history repeats, obviously no one knows the future. Gold's likely to do well given this inflationary and rising interest rate cycle that we've seen similarly in the 1960s and 1970s.
So you've seen because right now I, I hate to view it as investment, but it's flat, whereas with all the stuff that's going on, there people like my man Peter Schiff or whatever, like he's expecting like this big run up in gold, and you haven't seen it. It's not, I think it's slow and steady. So let me go back to the euro, so y'all put this in proper perspective. So it's gold is right. Gold is constant. Currencies fluctuate, right? So when you talk about eroding your wealth, that means if you have $10,000 or $100,000 and you buried it in the ground and you came back and got it 5 years, it will not buy the same amount of stuff, right? And so gold holds the value. So the dollar, like if here's the example I use, because I used to sell physical gold, right? And I would say if you had a $20, you could still get gold in 1920 was $20 an ounce, right? So if I had you could, the dollar said redeemable for gold, right? So if I had a $20 bill and 20 ounce, I could go into a top of the line men's clothing store and get a top of the line suit for $20, right? And I always tell people, now let's bury the dollar and the gold coin in the same box, and then get your $20 bill out and go in Philly as boys, but like a high-end clothing store, and with your $20 bill, and you can barely pay for the valet parking. People say, I can get a tie. You can't get a tie for $20. Okay, you might be able to get 2 pairs of socks, right? And maybe not. But if you had your ounce of gold, you could buy the exact same thing, because a good suit is still $1,200, $1,500, and whatever the ounce of gold is. And so now you've maintained your purchasing power. And that was a long Curtis rant. So people, Patrick, understand my little Curtis rants, because this show's about you, not me. And but I want to bring it into why because I love gold. So I'm very excited to have you on here, but I wanted to position that, because sometimes people don't get the eroding part. And I wanted to make sure that point was made. And because if it's inflation, gold hasn't, because the question was, why haven't we seen the run up like some people were predicting, in your opinion?
Yeah, I think you brought up a lot of good points over there. I mean, one of the
Sorry.
greatest examples too that I have for the dollar eroding is, I'm sure a lot of you have talked to the older generation, and they say something like, "Hey, I bought a cup of coffee for 10 cents, or a candy bar was 10 cents, and now it's $3." And it's not that the price of these things are going up. Your cup of coffee didn't change from the 1960s up till today. It's largely the same. It's a commodity. But
Right.
what happened was the dollar went down. So basically, everything looks like it's getting more expensive. But what's really happening is you have the Federal Reserve printing excessive amount of money. I
Yes.
think there's a stat too that says something, and I don't know it off the top of my head, but since COVID, I think about like a 30-40% of the money in existence was printed just in the last couple of years. And
Right.
if you think about that, if you're holding US dollars, that's a pretty scary thought too. But in terms of like what gold's going to do, it's I think it's important to note that in the 1970s, you had this period where inflation was kind of running a little bit, that mid 1970s, where gold didn't really do too much. And people were like, well, it's not doing much. And then, the people who got out of gold missed that run up from 100 up to 850. I think the thing, if you look at different asset classes just this year too, you look at the NASDAQ's down about 30%, S&P's down about 20%.
Mm-hmm.
You look at bonds are down about 10%. Gold is actually, I checked it right before this call, it was down 0.07%. So basically flat.
Mm-hmm.
What does that mean? I mean, if you look at gold too, one of the things I like to do is look at the average price too, because a lot of times people look, oh, is it high? Is it low? Why isn't it at an all-time high? Let's take a bigger picture back. Let's look at gold on an average annual price basis. So if you took every single day of that gold close for the year and you average that, 2022 is actually, gold is at a record high. So it takes back a little bit of this. You could say, well, it's not 2000, it was 2000. Or, why is it 1600? Just let's average all these things. Let's take out some of the volatility. And it is at an all-time high.
Okay. All right, good. And so how should incorporate, thinking about what you said there, how in your opinion should people position their portfolios during an inflation, obviously on an inflationary environment? Well, it's always inflationary because the Fed's goal is to create inflation. So, which I don't understand, because I don't know what's the problem with prices dropping, but our economy is built on gold. So it's basically built on credit, right? So if it's built on credit, which is confidence, I like real money. And so how should we thinking about, if you're looking at it, because I guess this is what your clients and are really interested in, and we want to try to hip our people to the game, so to speak, is how should they think about positioning their portfolios in this inflationary time? Because I don't think it's coming down. I don't see it coming down.
Yeah. So first of all, let me say there is no one size fits all.
Yeah.
I have family members in their 80s, and as much as I hate to be positioned in cash, I recommended that they stay in cash because they may need the money next year, 2 years, 3 years later. I can't guarantee that gold's going to go up or stocks are going to go up or any of this stuff. So I said, first of all, it depends on.
Wait, you don't have a working crystal ball?
I wish I did.
All right.
But I would say position yourself based on your risk tolerance. But what I like to do is I like to look at history first of all. Like let's let history be our guide. So if we look at the past 50 years of data, so this is basically the early 1970s up till today, so a lot of data there, and look at 10-year average returns. So I'm not going to reward gold in 2011. I'm not going to penalize stocks in 2008. Let's just average all these out, assuming you held a portfolio for 10 years. Let's see what stocks, bonds, and a gold portfolio did too. So if you look at a 100% stock portfolio, and this is typically what financial advisors would say, you want a high return, but you're okay with high volatility. On a real return basis, it's going to return about 7% per year annually. And this is real return, so adjusted for inflation. It's going to have that standard deviation of about 5%. So that's kind of your benchmark stock portfolio. If you did a bond portfolio, so 100% bond portfolio, and typically this is viewed as like the completely conservative option, you're going to get a 5% real return. So 2% lower than that stock portfolio, and a 3% standard deviation. So lower return, lower standard deviation, so lower volatility. If we look at that same period, like I said, 50 years of data, and you did 20% gold, 80% S&P, just to replace the bond portfolio with gold, you're going to have an average annual return of 6.7% during that period. So almost the return of a stock portfolio, and a volatility of 2.7%. So actually less volatility than that 100% bond portfolio. And so that's what history says. That's 20% gold, 80% S&P. But like I said, I would say everyone's situation is different.
But everybody should have some. I think everybody should have some of the gold. Some of y'all that listen that have seen our videos, I would position gold more so in the green tank. So what we do is we teach, I have this thing we teach, Pat, just for reference, called the personal economic model. And so we have the tanks, right? So yellow tank is your assets or investments, what I call the risk tank, where stuff goes up and down, and the green tank is your safe money. I actually position gold the way I think about it in the green tank. Okay. Not in the, y'all kind of do it in a yellow tank, but I think about it as insurance more so than because I don't see me ever selling it. I would want to own it. And I'm like Kiyosaki in that regard. I'm never gonna sell it. And but that's the thing. So I like that. And I just want people to think a little bit more macro because I had a mentor say, if you know what's going on, you know what to do. So when you're looking at the whole thing and this baskets of assets and where does this fit in, now you're already thinking better because you're seeing what I call, it's like football. You're seeing the whole playing field. I always tell people I want a West Coast offense with my money. I want to spread the ball. I want to spread out the defense and I want to sling the ball all over the field. So what are the various ways? How can people own metals? And then I want to get into talking about your company.
Yeah,
what are the
so
various ways they
you
can own it?
you could own metals in a variety of different ways. You could own the physical by buying physical gold, silver, platinum, palladium. You could do a solution like vaulted, like One Gold, where you essentially have direct ownership in basically gold and silver in a vault. You could do an ETF, which I don't recommend. You could do futures is another way, which is a speculative way. You could do mining shares, which have their own set of complexities too. But what our company likes to do is we like to focus on the first two, which is buying physical and buying vaulted. And I could get into those two if you want.
I do. Yes, yes, yes. So it's because those are the pros. Like I like both, but I really like because I just full disclosure. Well, I'm not a big customer, but I have one goal. So I've got some gold because I wanted to try it and see what it's work. And I like the idea of I've got some and somewhere it's in some vault with my name on it, right? with my 5 ounces. I don't know where it is, but with that. So tell them how that works because I think both is a good combination.
Yeah, let me get into the physical first, and then I'll get into One Gold and why
Mm-hmm.
we started with that. So, Atmex is one of the largest online retailers in the U.S. We have about 2 billion, or not 2 billion, 2 million customers
Yeah.
around the world. We sell gold, silver, platinum, palladium. What happens a lot of times is when people take physical delivery, they like it. I like physical gold because it's in your hand. It has no counterparty risk.
Right.
No one could hack it away from you. You can easily pass it from generation to generation. It's 100% private. Taxes are self-reportable.
Just don't tell anybody that you bought it, right?
Yeah,
or stored in my house, right? Okay, go ahead.
yeah, but I mean, it's super private. I recommend that everyone do own some physical. There are downsides of that about that though, because typically when people buy it, they store it in a safe, they hide it under their bed, they hide it in their house, and that might not be a big issue if you have a couple $1,000s. But what happens normally is people start with a couple $1,000s, it becomes tens of thousands, and if you're fortunate, it becomes a 6 or 7 figure sum. And that becomes problemsome at some point. Like we have customers that spent north of $50 million, and some of these guys have their own private vaults and so on like that. But let's say you spent, I don't know, let's say $100,000. You put $100,000 in gold. It's like, where do you put that in your house?
Right.
Probably not the best thing. All it takes is one guy with a gun coming in at 3 a.m. in the morning, and your gold's gone. So what we did back in 2018 is we wanted to create like a modern way to purchase gold because a lot of times people say, well, I don't want to hold gold in my house. I want to own gold, but like what do I do with it?
Yeah.
So Atmex partnered with Sprott back in 2018. And Sprott is basically a large alternative asset manager out of Canada with about 22 billion under management. And we came up with a concept called One Gold. Many people call it like the Robinhood or Coinbase of precious metals because it's so intuitive, it's easy to use. Everything's online through a website or an app. But One Gold's a platform that allows customers to buy, sell, and trade vaulted positions of gold, silver, and platinum stored in the US, Canada, Switzerland, or the UK. And how we do it is first we have agreements with various vaulting companies in the world. So it could be the Royal Canadian Mint, it could be Brinks Vaults, it could be Loomis Vaults. We then source the 1,000-ounce silver bars and the 400-ounce gold bars. So these are the bars you see in like big movie scenes where someone breaks into a vault and you see all these gold bars. So we buy a lot of these gold bars, silver bars. We put it in a Brinks and Loomis vault. And then we make the metal available for sale too. So we only sell what we have. If you happen to go on One Gold and you place an order for larger than the quantity we have, we actually won't let that order go through because we want to maintain that one-for-one backing. And then when customers own it, they own an allocated and segregated position of metal, depending on where they buy it on the vault. All the metal is insured by Lloyd's of London or the Royal Canadian Mint. It's audited twice a year by a top 5 accounting firm. And then the nice thing about it too is we offer a redemption option too. So let's say you have this vaulted position of gold and you said, you know what, I really want my gold eagles. You could swap your position on one gold for any of the 25,000 plus products available at Atmex, and we'll ship it to you the next day. And you could basically take the gold and get it in your hand.
Nice. So let me go back to Ampex first. I want to bring something out. So if you're because I want you, he's not selling you bars of gold. Like you can get American Eagle, you can get the coins, the gold and silver through coins or those little ingot bars. Like how does that come? And then they can buy it from you at whatever above spot, and then you'll ship it to them.
That's correct.
What's going on? Okay,
that's correct. So at Atmex, we like to call it like the Amazon of precious metal. So you imagine going on Amazon, it has anything you could want in the world.
Yeah.
Amex is the same thing. We have 25,000 plus products.
Oh, that's a great analogy. Yeah.
If you want gold, you want silver, you want platinum, or your palladium, you want your gold eagles, you want your gold maples, you want your gold credit Swiss bar. We sell that stuff on the silver side: silver eagle, silver bar, silver rounds. If you're like to collect stuff, we sell Star Wars stuff, Peanut stuff, Batman things, just whatever you're interested in. We sell it. Like I said, it's like the Amazon of precious metals. Anything you could think of, it's available for purchase. You add it to your cart just like any e-commerce site, pay for it, and then it'll ship directly to your house.
There you go. That's the silver, especially the silver. The silver is good gifts if you want to, give it to your kids and real money. I had a young lady one time was buying like $300. She was just dollar cost averaging in the silver, right? And she would just do $300 a month standing order. And just buy that and build that up, because silver is what, 20 something, $21, $22
$24 about.
Yeah.
Yep.
So still you can get for $100, you can still get some meaningful money if you want to just see it. Like sometimes I like to have it. I want to get something just like I have it. But I like that. And then now but I love one goal idea. Okay. Because if you want to really get some capital in there, you don't want to have all this stuff. You don't necessarily, like people say, well, I'll just put it in a safety deposit box, but we're both talking about history here, right? So there's precedent that, because I used to have this little what's that thing, mailbox, not mail, post office thing, where FDR had this thing where if you $10,000 fine or imprisonment if you don't turn over your gold, it would go into your self deposit. And so probably won't happen again, but it's happened. Okay. And so I have a little bit of a healthy, what's the word, conspiracy theory rolling through my head. So not complete tinfoil hat, but a little bit. What are I want to ask you one more question. I want to get into a little bit about how they can get in touch with you. What are there any trends that you're seeing in the industry that we should be aware of as we're looking at that and looking about how to add this to our portfolio?
Yeah, so if you look back to like 2019, let's say before this whole pandemic mess that we had, we were doing about $1 billion in sales every single year. And then you fast forward to 2020, obviously we had that March crash where everything sold off. You got a lot of people into metals. I think silver went down to about $12. Gold was probably about $1,400, $1,500. You saw a lot of people running in because they saw that price point too. And then in 2021, you had what we call the silver squeeze movement. So a lot of you had this whole group of community of people going around like Wall Street Bets saying that there's a massive short position in AMC and some of these other stocks. And then there was basically it came to light that there's a massive short position in silver as well too. So in 2021, in the beginning of the year, you had a lot of people run to silver, trying to create a short squeeze and drive this thing up. But ever since then, we've seen a lot of new customers get into precious metals. You're looking at customers from now back to 2019. We're at like more than double the number of purchasing customers per year. You look at sales, and we primarily just sell to the retail public too. So we did north of 2 billion in sales last year. Going to do north of 2 billion in sales this year. So basically a doubling compared to what we saw in 2019. So I think a lot of people are seeing that inflation's here. the economy is likely to going to struggle in the next couple of years, and they're running to something different. Obviously, stocks are down, bonds are down. They're saying, well, what could I run to that's different? So a lot of people are running to gold.
What this might be outside of your purview, bless you. Like I used to hear people say, crypto is the new gold, right? Digital gold or whatever. I was like, I give me gold, right? And but do you ever get that, or what's your feeling on your opinion? Because on I don't know if comparison is the wrong word, but in your portfolio, I'm biased, so I'm trying not to say anything I want to ask you, but when you're looking at that, and because there's a lot of games being played with that. I mean, even on the there sometimes metals can be manipulated. Like I said, they're trying to short squeeze the gold, but it's still a scarcity, got to come out of the ground, has intrinsic value. Silver has, all of the stuff that all the phones, all the stuff they're on right now needs silver, right? So it's industrial metal and it's money, and so I like that. So have you ever got the comparison, or people that, well, or I'm going to use Bitcoin, I'm going to buy gold? I mean, do you have does your platform do that, or how do you feel about the interchange or the comparison of the two?
Yeah, so let me first start by saying that we do actually accept cryptos on AppMex and OneGold through a company called BitPay. So we actually don't take exposure to crypto. So if someone paid for gold with cryptocurrencies, we convert it right to US dollars, and then we're neutral. But we do accept that stuff.
Okay,
But in
good to
terms
know.
of gold versus Bitcoin or cryptos too, I think they're different.
Yeah.
They serve different roles in a portfolio. It's like, let's go back to gold. So gold has had thousands of years of history.
Yes.
It's been money throughout different cultures in Asia, in the Middle East, and in North America. It's always been money. You look at cryptos too, and the oldest cryptocurrency is Bitcoin, and it started in 2008 during that financial crash. I think that the interesting thing to see is what's going to happen to Bitcoin in a rising interest rate cycle that we're currently having. It currently didn't do well. People are saying it's an inflation hedge. Well, it has no data.
Right.
Could
Right.
Bitcoin go to 100,000? Sure. Could it go to zero? Sure. I don't know. Unfortunately, we don't have a lot of data right there. We have
Right.
about 14 years of data versus gold's thousands of years of data. The way I would like to say is, obviously gold has its history. I recommend that everyone has a portfolio allocation to gold. Bitcoin and cryptos, I look at it as a speculation.
Yes.
Put what you could afford to lose. If you can't afford to lose anything, don't put anything in there. But don't be one of these people that go 80, 90, 100% in there. I've seen articles too where you say, this crypto millionaire lost it all because he didn't, have a proper portfolio. And I was like, well, I mean, that's what you get for putting in an asset that has a 14-year history. It's like no one
Right.
knows what it's going to do.
Right.
But I would say cryptos are more of a
At
speculation.
least go to
me.
Vegas. You'll have more fun if you're going to gamble.
Yeah.
Yeah,
exactly.
You can at least you get dinner and a show, and some other fun stuff with it. Like what's that show with anyway, that movie, the Hangover, right? You can do that.
Yeah, there you go.
All right, let's talk about. I'm really curious about. Thank you for that. The precious metals reward card. So tell me about, what is that? That sounds interesting.
Yeah, so this is a process that I'm super excited about. It was like a 3-year process in the making, but it's called the bullion card. It's the first precious metals rewards credit card. So instead of earning like cash back or airline miles, this card gives you gold or silver, depending on what you want. It's 4% back in gold and silver when you make a purchase on AppMex or OneGold, 1% back in gold and silver if you make a purchase on anywhere else. So this is your gas, your groceries, your shopping at your favorite retailers. You get 15,000 bonus points, which has $150 value after you spend $1,500 in the first 90 days. So it's actually interesting. I bought an ounce of gold on OneGold for my first purchase, and I got it well below spot because of that promotion. The card offers 0% APR for 12 months, 0% APR on balance transfers for 12 months too as well. And there's basically two options. There's an AppMex option. So if you like physical gold, you could apply on the bullioncard.appmex.com, and your rewards would basically be put into like a gift card balance that you can redeem on your next AppMex purchase. So you can redeem it for any metal you want, any amount you want it. And then if you prefer the vaulted solution too, there's actually a OneGold option. That's at thebullioncard.onegold.com. And this is the one that I personally got too. But you could have your points automatically redeemed every month into gold, silver, or platinum. So let's say I spend $100 at Costco. I'm going to get some gold directly into my account, in my OneGold account. And the way we're able to do this too is is One Gold sells metals in 0.001 ounce increments. So if I could get as little as, let's say, $1 in gold, versus on the APMEX side, there is no product that is cost $1 in gold. Like
Right.
they just don't make them that small too. So there's two options for the card. I personally think it's super cool. I actually have not gotten a credit card in over 15 years, but I got this one because I thought it was a cool credit card.
You got to give me, so we're going to put the links to that in the show notes. You send me the links so I can
Sure.
like not mess them up and try to use my handwriting. And but that is very cool. So Patrick, what did I miss? What anything I should have asked you that I haven't asked you, just to make sure I didn't leave anything out that you want to talk about, or that you want to say, and then I want you to tell them your contact information, how to find out more about what you're doing and follow One Gold and start building up their portfolio.
Yeah, I would say if you're looking into getting into precious metals, definitely look at the spreads between your products when you decide to buy. And the spread is basically what it's going to cost you over spot to buy, and what you'll get back for it when you sell it. And the reason it's over spot, so I just look at, for example, a pound of coffee is like $2 a pound. If you go to Starbucks, you're not paying $2 a pound. There's a markup for that coffee because it has to go through the distribution chains. It gets distributed, it gets to Starbucks and so on like that. And there's a lot of middlemen involved. So same thing with any commodity too. You can't get gold and silver at spot unless you take delivery of a large industrial bar from the exchanges, which are not very retail friendly. So you do pay a little bit over that, but I would say look at what you're paying over spot versus what you're going to sell it for. You want to make sure that you're getting a good price. So if a dealer is saying, hey, I'll charge you, let's say it's a silver product, I'm going to charge you $4 over spot per ounce on silver. I'll buy it back for $1 over spot. Okay, great. You have a spread of $3. If another dealer says, hey, I'll charge you $10 over spot and I'll buy it at spot, well, that's probably not a good deal,
right?
Because your spread is. So I would say look at that too. Look at your bid-ask spreads. With One Gold, we actually, since we're buying a lot of commercial grade bars, these are the larger bars, the spreads are a lot lower than your physical side. So on One Gold, it's 2% over spot for silver, 0.8% over spot for gold, and this is much lower than the retail products.
I love that. Okay, yes, that's good. So, Patrick, tell them where to go to get more information about both your companies, and I think they sound fascinating, and how to get a new credit card that's going to pay you back in gold. That's awesome.
Yeah, so first of all, let me say I would recommend that everyone have some allocation to precious metals, whether that's 1%, 10%, 20%. Have an allocation. I think the next couple of years are going to be extremely difficult if you don't have an allocation to precious metals. If you want the physical, you can check us out at apmex.com. That's apmex.com. If you like the vaulted solution with the lower premiums, you could check us out at onegold.com. That's onegold.com. And if you want the bullion card too, you could check us out at thebullioncard.apmex.com and thebullioncard.onegold.com. And if you have any questions, feel free to email me directly. I'm at patrick.yip@apmex.com. That's patrick.yip@apmex.com.
All right, there we go. Patrick, that was great. I think that, as you go into the new year, you got to think about, okay, where should my money be? What business is my money in, right? And so if people say gold is a barbarous relic to the past or whatever, but central banks are buying it like it's going out of style. Russia is buying it like it's going out of style. China is buying it like it's going out of style. So don't do what they tell you to do. Do what they do. Is the premise of Patrick of our whole business. Stop doing what the big boys tell you to do. Watch what they're doing and do what they do. And smart money is in metals. The portion of their portfolio is going to metals. So don't just listen, so study money. Understand what's going on. If you know what's going on, you know what to do. We'll end with that. Patrick, thank you so much for sharing your knowledge and expertise with my listeners on the Practical Wealth Show today.
Great. Thanks for having me on.
All right, guys, go out there and make it a prosperous day. Get you some gold. If you're going to get a credit card, at least get some points, get some gold, right? And get back some real money. That's good stuff. Yeah, I'm telling you. All right, guys, have a great day.